Is this just a one-day rally or sustainable for the long run? Ann Bartels is Chief Investment Strategist at Sanctuary Wealth, and Bob Pisani is our Senior Markets Correspondent. Ann, how do you answer that question? Is this a short-term reaction or something that might be more enduring?
I think this is something more enduring. We think the market was actually positioned to rally. We were getting buy signals prior to the election, and we've really been looking for the market to trade up near 6,000 by the end of the year. In fact, we introduced a 6,000 target in the first quarter of this year. I'm really liking the action that I'm seeing and the breakouts that I'm seeing. I think this is setting up a market that will do very well in 2025. And I think, extended tax cuts can help hit the bottom line of corporate earnings. And I think that's another reason why you're actually seeing the markets rally so strongly, that this is going to be a positive impact on earnings.
What do high and rising bond yields tell you, Ann, and what do they portend, if anything, for equities?
So I know that, Trump being elected is an inflation trade. We are getting the backup in yields. But I also think that's part of having a stronger economy. But when I really look at yields, I think they're rallying within a downtrend. So I think they can rally, particularly the 2-year. I do think we can get a little bit higher. And I think we can rally into the end of the year. In fact, seasonally, we tend to see rates rise as we go into the end of the year as businesses need capital. But as we go into next year, I actually think we're going to actually see interest rates come down. And that will be another reason why equities can rally and why PE multiples might actually expand.
Bob, let me turn to you to maybe kind of highlight some of the notable movers. We've talked a lot about what's breaking out today, but obviously clean energy and other areas are under a significant amount of pressure as well.
Yeah, this is kind of like the ultimate stock market fireworks display here. I mean, look what you have here. You have promises of lower taxes. You have promises of less regulation. You have the Fed cutting rates. You've got a strong economy, and you've got earnings that are already strong going into this. My heavens, you can't write a better scenario for the stock market. I think the question for me as the stocks guy is, can this translate into real earnings growth on top of what we already are seeing? In the case of banks, I think the answer is yes. Here, we've got higher rates, generally good for banks. We have less regulation promises out there. We have some merger deals like Capital One Discover that might go through. So yes, in the case of banks, I think it can help earnings. Can it help elsewhere? Well, we've got tariff promises out there that potentially could help things like the steel industry, and we're seeing steel stocks respond. So yes, there are areas where earnings growth definitely can occur as a result of this agenda. But Tyler brought up a great point. This higher rates thing is a problem. There's something that doesn't gel here with tax cuts and promises to fix the deficit with what we have 50% of the spending is on Medicare, Social Security, and defense. Something doesn't quite gel in that story, and I think that's what we're going to be examining. Tyler's got the right point here.
Ann, let me turn to the question of Bitcoin, which is up heavily today, or strongly, I should say, 75,000. Where do you see it going, and what's the propellant?
So it's really hard to put a valuation on Bitcoin. So we really rely on the technicals. And we've had a significant breakout in Bitcoin. And I think it's targeting in the near term up towards 100,000. And what a lot of people may not be aware of is that Bitcoin has actually been the best performing asset class. It broke out in the first quarter of this year and consolidated and only recently broke out again. I think you're going to be hearing a lot about crypto and a lot about Bitcoin in the coming weeks, months, and quarters.